Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are going to be talking about a very important topic as we do every day here on VCTV, but this is very specific to fundraising. And this is not only a hot trend in 2020, but what is named as the fundraising trend of the year here in 2021. And we're going to talk a little bit more about what that means and if that's really true. And what I'm talking about are SPACs. So special purpose acquisition companies or blank check companies. This we saw a lot of activity on in 2020. Some of that was due to coronavirus and a lot of M&A activity, so mergers and acquisition. A lot of companies that found the opportunity to go into the public markets to raise additional capital as well. And according to PitchBook, in 2019, we saw 30 companies, 30 companies go down this path of fundraising into the public markets. In 2020, we saw that number more than double. According to PitchBook, it was over 60, around 66 coming into the end of the year. Here in 2021, we're only a few short days in, almost about 2 weeks into the year, and we already have companies like Bakkt, SoFi, Open Door, and many others who have already announced their efforts into the early days of this year that they are preparing for their SPAC offerings, or again, mergers into additional companies. And we're going to explain what all of that means here in just a minute as we've brought together two of the best and the brightest from around the world to share with you their thoughts and insights around this particular topic today, and also different technologies, industries, and regions around the world, and their on the ground perspective around such as well. If you would like to be on a show like today, sharing your insights around either SPACs or different technologies, do reach out to the team and or myself, and we'll find the right spot for you. Entrepreneurs, also an opportunity for you here as well on VCTV, and that is joining our virtual stage to get up and pitch us as investors, your company, product, or service. Also get real-time feedback, exposure to the entire VCTV community as well. And if this is your first time tuning in, make sure you check out the archive. And if you're liking what you hear, click subscribe as well to tune in all day, every day to all episodes of VCTV as we bring education from around the world to you on a number of different subjects. And speaking of our team, a big thank you to the LATOKEN team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. Let's go ahead and introduce our guests for today. Jose, welcome back to the show. It's a pleasure to have you. A little intro, a little background.
Thank you, Kyle. So happy to be on your show again, and really looking forward to this one today because it says a wonderful topic. So my name is Jose Grasa. I'm in essence a serial entrepreneur that became later on a business angel and a VC. I also have done some mentoring. I've also been a jury member for several venture contests in Europe. I'm not that active anymore today in that environment, but I still do investments. In the last 5 years, I've been investing essentially on what I call business inclusion, and which is something which will be a hot topic for the next 5 to 10 years. Yeah, here on VCTV, it really makes my day. Thank you, Kyle.
Thank you very much, Jose, as well. And you're right, business inclusion also plays a little bit into today's topic, as well as these blank check companies, or again, SPACs, open up a number of jobs and new companies as well. But we're going to put a pin in that. And before we go further, welcome up our next guest, Peter. It's a pleasure to see you. Welcome back to the show. A little intro and a little background for everybody.
Hi, Kyle. Thanks so much. It's always a pleasure to be here. So my name is Peter Plaut. I am the executive director of the Weimer family office based in London and Denmark. I'm actually based in London despite my New York accent. I was born and raised in New York, haven't lost that accent. So we invest across the globe in various asset classes. Predominantly, we invest in real estate, but we also look at telecommunications, media, technology companies, oil and gas, natural resource, alternative energy. Our minimum size investment is around 150 million, but we can invest up to several billion. So our assets under management, obviously, implicitly, are quite large. We represent 6 families when you include the Weimer family office. So we are a multi-family office, multi-billion-dollar family office. And one of the reasons why I enjoy being part of the VCTV series and LATOKEN is because not only for educational purposes for myself, but it gives us the forum to basically talk about what we're doing as a family office in terms of impact investing.
Absolutely. And it's a pleasure to have you both here. And Peter, I want to start with you. I mean, a lot of these industries you just mentioned that you and the family office focus on so heavily, pardon me, are also big categories where there have been a lot of activities around special purpose vehicles. And so before we maybe get into what that means in those areas that you're seeing, but what is a SPAC? I mean, what have you seen in terms of the evolution of these special purpose vehicles that have been put together? Yeah, would love to know your thoughts of kind of what's happening in the space.
If you went back a few years ago, the whole SPAC situation was probably secluded to a small esoteric area of finance. Over the last 2 years, as you mentioned, it's actually become a booming industry and has taken center stage in terms of from an investor point of view, whether that investor is a retail investor or some large investors, including private equity and VC. Last year, I think you mentioned the number in terms of volume. In terms of dollar size, I think we were over 40 billion in 2020, and I wouldn't be surprised if we even doubled that in 2021. Just in the first few days of this year, I've spoken to a number of asset managers and private equity firms that are already ready to launch their SPACs. What are their SPACs going to be used for? Again, they're blank check companies. They're basically publicly listed. You can invest in a SPAC without any assets in terms of companies in it today. And you could also have liquidity. You could buy and sell your shares in that SPAC. The whole purpose is in the future, they will be buying other companies. If they fail to achieve the acquisition of a company, that SPAC then winds up. But the purpose of it is it's already there. So a lot of the regulatory issues that are take a long time in terms of paperwork and other to do an initial IPO is already taken care of because the SPAC is trading, and therefore it compresses the time frame to come to market. Obviously makes that extremely attractive for VC companies in the technology space, but also for private equity. It gives them another way to basically accumulate assets, significant size assets, and then go and purchase the companies that would be part of that vehicle. So it provides liquidity, easy access to market. It opens up the door for retail investors. So it's not just precluded to the large private equity, which some people have a difficulty to get in unless you have a certain minimum investment. From a family office perspective, we're not there yet. In my family office in terms of investments in SPACs, but it's definitely something to look at for the future, particularly dependent upon the type of assets and the PE firms that are going to be investing. If they have a big track record in the past in terms of successful acquisitions and exits, they should be able to do that quite successfully via SPAC.
Mm-hmm. That's great. Thank you very much, Peter, for setting that foundation as to kind of where these things are and also just in general what a SPAC is. It's a great opportunity. As you said, it's much faster than going through a typical public offering and the S1 filing, the road shows and all of the paperwork and all of the everything else you have to do as a company, which most don't understand until you do the process. And so it is a much cleaner way or a quicker way for companies that are looking to get into those public markets and start getting liquidity and also raising funds, but also
based. That's where predominantly the SPACs have come from. However, over the last year, we've seen more opening up on a global basis, in particular in Canada and the UK, and that's why I said I wouldn't be surprised to see it double this year, and then over the next 10 years, it's going to be a significant asset class globally.
Absolutely, and globally, we see typically reverse mergers, right? Where companies are coming in and they're taking into a company that may no longer be active and reverse merging into the public markets, and SPACs offer a new opportunity to that as well here in the US.
Thank you, Peter. Kyle. I think what's important as well is you can get into a SPAC pre its acquisition. You can cash out of that SPAC. Okay, but still have an option or through warrants to participate in post acquisitions. So you're basically getting a free option by initially being an early investor into a SPAC, and that has significant inherent value.
Yeah, I mean that's something we haven't seen. I mean, we've got a few examples here in the past couple of years, but I mean, we really haven't seen that type of asset class, to your point, open up as large as it is or will be here this year as well, with the type of assets and the type of companies that we've seen private for so long that have also had impact on so many industries. And we're already starting to see a little bit of tease, and we will come back to this. Jose, I want to make sure you get some thoughts in here too, but we're already starting to see some tease around more companies in the blockchain and cryptocurrency spaces being talked about going into this, right? Fintech is actually a huge area that is expected to thrive around SPACs this year as well, based on what we're seeing in the news cycle and headlines as well. So Jose, anything to add as to, what's the current state of SPACs and maybe what you're seeing from your side?
Let me put it like this. I think the common viewer doesn't understand really what a SPAC is, because in essence, it's a solution that targets more professional investors, although we want to bring it somehow to retail. But the majority of the population, is not able to follow. I don't think it's that let's say new, because there were solutions in the past before the SPACs. I remember that, for example, in Canada, they were doing a lot of combinations with similar SPVs. Even before companies would get into it, they would raise funds. Those funds, by the way, it's very interesting, they would raise through ICOs. So they would do SPACs with ICOs, or something that we have not seen. Now we are talking about listings, and marketplaces real time. But at that time, it was a little bit different. And I also want to touch that it's possible for you to buy a shell company, right? So you can buy a listed shell company. I don't think a lot of viewers know what a shell company is, but a shell company is a company which is basically lying there dead, doing nothing, right? It's available. You can buy it, and it's already listed. It has already a reference on the marketplace itself. And then what you do is you take that shell company, and you in essence you can put an X amount of companies into that shell company if you would like to, right? And buy, etc., etc. So there are so many options that you have. But the SPAC, the way it is today, right, it has come to a certain point that it's really handy in asset. It has a lot of advantages. Okay, the advantage that I see is that it's possible for you to raise a huge amount of cash, right? Not only from private equities and VCs, but also from privates at a certain point. Accumulate that cash and then do your buyings on the market. Or if you don't fulfill your mandate or the way you are proposing that SPAC, then basically you give money back to the investors initially. So what Peter said, it makes a lot of sense, and this is really how it works. It's not an easy topic for everybody to understand, so maybe we could trim it down. Okay, and as to far it's business inclusion, right? Let me put it like this: inside BizMoney, we have something different. It's not a SPAC, but it enables everybody to do a listing by itself inside BizMoney itself. So you can get a partner, or you can sell your company, or you can buy a company inside the ecosystem. So you don't need to go through an IPO, but we're talking about small-sized companies and assets, right? What we are tackling is, micro, one-man show, small companies, typically up to 10 employees, maybe some bigger companies up to 100 or 200, but that's 90% of the economy today, more or less, in the amount of companies that we have, not in volume. Okay, so we could do a similar thing, like combining, right, and then buying, but there is no interest in that volume or in that size. There is no volume that would justify such. But maybe Peter can pick it up from here. He definitely has much more knowledge on this than I have.
We'll throw it over to you, Peter. I mean, we'll continue the topic.
Well, I think there's a couple things to really focus on, particularly for your audience, is let's look at SPACs in terms of small to mid-sized companies that could be taken public via this SPAC. I think there's a huge opportunity in the post-pandemic world for technology companies to be acquired by a SPAC, thus providing a more liquidity than there otherwise would be to the founders of that company, but also for a traded vehicle. I think that for the time being, you'll see more U.S. companies in U.S. SPACs rather than U.S. companies acquiring foreign companies through SPACs for relative U.S. tax burdens. So if you're going to look to acquire a SPAC, a foreign company, it'll probably be done through a foreign listed SPAC, like the UK exchange. For tax efficiency, the BVI and Cayman Islands will probably see the largest growth in terms of SPACs, whether it's US or foreign jurisdictions, just basically on the favorable tax jurisdictions there. And you will likely see companies from both Western European as well as emerging and others coming through that. We've already seen a Chinese entity, an Indian entity in 2020 use SPACs and use it through the BVI or Cayman Islands offshore. So I think it's a sector to watch. One of the things that I particularly like about it is you can invest, and this is relevant, very relevant to your tech-focused retail investors. You can invest in a SPAC initially, as I mentioned, pre-acquisition of a company. So pre-acquisition. You get the warrants to participate in post-acquisition. In essence, you're basically able to, that warrant actually gives you the opportunity to buy in, if you cashed out of that SPAC to provide yourself liquidity, into a post-acquisition company at a predetermined price. That will be at a premium to what the IPO is, but it'll be a predetermined price. Therefore, you have a couple of things from a retail point of view. You basically have uncertainty in terms of the risk that you're taking in pre-acquisition, because you know how many assets are in the SPAC. The SPAC raised assets to then go out and acquire companies. So you know what that liquidity is worth, therefore you could value your share, provide you with liquidity. Post-acquisition, you know, money went into a certain company, you could value that company. My point is it's extremely, relatively easy to value the components of a SPAC as well as the SPAC based on the assets that are there. And therefore, that should lead to growth in retail interest in the SPAC because you have that clarity that you wouldn't have. So it's basically on pre-acquisition, it's a relatively low risk vehicle because you know what type of liquid assets are there. Post-acquisition, obviously it's up to the companies that comprise the portfolio companies, whether it's a single company or portfolio companies in there. So I don't think people should basically, that are your audience, they see a SPAC and think it's some type of esoteric mortgage-backed security that's going to cause the next financial crisis as in 2008. It's simply a vehicle for ease of use in terms of attaining a publicly traded vehicle. Shortens the time frame, still under regulatory jurisdiction, and those regulatory issues are becoming more focused to protect the investors that are in there. But it is an asset class, it's a growing asset class, and it's definitely something that your readers and your listeners should watch. And I do believe we will see more, not just technology companies, but Bitcoin and others being used as a vehicle as part of these as it becomes more readily acceptable.
Absolutely. And one of the things that we've seen in the news and in a lot of reporting or the filings of these SPACs is a lot of them are vertically focused or industry focused as well, right? We've seen them around certain types of technology. So things like fintech, longevity, we've seen them around artificial intelligence or bio and pharma, as we spoke a little bit about yesterday. Also seen them around cannabis and now gaming. A whole different set of industries, and would love to ask both of you and get your opinion on maybe what industries do you see really being able to take advantage of this, or may take advantage of this more than others here in 2021. I mentioned fintech seems to be pretty popular based on also a TechCrunch article that was reported this morning talking about Bakkt and also SoFi as well. So would love to hear from both of you areas and industries that you think will take a lot of advantage of SPACs and the opportunities within. And Jose, let's start with you.
Look, in essence, almost every industry can benefit from this, but definitely those industries that are more capital intensive or have a fast growth rate and need cash to be able to finance that growth. I would like to explain to the audience one thing which is very important. Why most of these SPACs are in the US or eventually some of them in the UK. Look, 60% global capital, right, simply runs in the US through New York. Okay, so the New Yorkers don't own all that cash, right? But what happens is that everybody from all over the world, more or less, invests their cash in New York. Now, London accounts more or less for 18%, and Tokyo for another 18%. So if you take those three cities, you're talking about 96%, right, of liquidity that runs for investments basically through cities. So every other marketplace that you can consider, right, even in Germany, Frankfurt, or some other places, it's peanuts, nothing compared. You know, they even had to join together. For example, the Scandinavian marketplace is quite liquid. It's quite interesting to see, but in size, it's very small. So they had to more or less make a combination of several small marketplaces, you know, to make it interesting, right? Now, where do I see that the SPACs is a huge, tremendous advantage for creating conglomerates? Okay, so if you would like, and that's why it's sector-based, if you would like to acquire, right, an X amount of companies to make a conglomerate in a very fast pace, then a SPAC is fantastic, because in essence, you can pour in the cash into that SPAC or SPV, the way you want to name it, and you can start buying all those companies. And I can tell you one thing is that there is one company, I don't know the name now, or one SPAC that is running. I think it's running, where it's underway. That is buying, okay, like 1,000 retailers from Amazon and putting into a separate conglomerate. So just for you to understand, right? Now, if you look at that, okay, then I would like to showcase BizMoney. Why? Because what we do at BizMoney, in essence, right, is more or less, you know, similar, but in a different package. Okay, what we do is, right, we target and we bundle all these, let's say, sector, which is micro and small companies, right, into one place. But in essence, what it happens is they also will be able, right, to have access to the BizMoney fund, you know, to be able to grow themselves. Now, in the BizMoney fund, you could look at it like a SPAC. Okay. So I'm just giving you a different perspective to this, so that the audience understands that there's a lot of flexibility and variety into this. But definitely the conglomerates, I think it's the best case. And finishing here, the reason why it's essentially in the US and probably also some part in the UK is because the cash is available in the US.
Good point. Also, the small counter is that Hong Kong and Singapore are also two large areas of capital opportunities as well, which there we're not seeing yet this same terminology being used, as Peter had explained as to why, but also in those areas we're seeing different types of fundraising opportunities. And this all just plays overarching as to what we talk about here on VCTV, and that is investing and fundraising in different industries and technologies, et cetera. And you know, in Hong Kong, for instance, there is a third exchange that was created to allow for companies with little to no revenue being able to go public in specific sectors until it fully opens, right? So I think it's bio and pharma, for instance, can go public and open up the opportunity for X amount of number of investors to come invest into them in a public way versus through private solicitation as well. In Australia, we've seen, and again, as Peter mentioned, or as we all did, excuse me, the reverse merger through things like the ASX or the TSX, so the Australian or the Toronto stock exchanges in Canada as well. So lots of opportunities if you're looking to raise capital. It's not just raising money from individuals and angels and VCs to family offices, and corporates, but there's also these other vehicles either if you have revenue or if the opportunity makes sense as well. And I'll leave that as an asterisk because we'll come back to it. But Peter, I want to come to you. Thank you, Jose. Industries or technologies or areas that you see that will be really frothing at the mouth to get into SPACs this year as we head into 2021.
Well, let's also step back for a second, then go into the various industries. I agree completely with Jose. The industries that are relevant to it are unlimited. It's a huge opportunity for small companies that otherwise maybe wouldn't have the wherewithal to do an IPO, can take advantage of the tremendous amount of liquidity sloshing around the globe. Where'd that liquidity come from? We had liquidity initially coming from the global financial crisis in 2008, which led to record low interest rates and central banks around the world priming the pump in terms of liquidity. And that did not all get absorbed. So there was still lots of liquidity going on, and we still had record low interest rates. Now we have the global pandemic. Between March and June, in the course of 3 months, which would have taken over 2.5 years back in the 2008 financial crisis, central banks from around the world basically came together and provided significant amounts of liquidity to the global financial system. On top of that, we also had unprecedented fiscal responses to help individuals. That monetary easing, okay, has led to a tremendous amount of liquidity searching for a home. That liquidity could be through reaching for a coupon, because in certain cases, some interest rates, some yield curves are negative in certain parts of the curve. So you're actually paying to place your money into a bank. That unprecedented level of liquidity has led to funds from around the world, including private equity, credit funds, and others, being able to raise significant amounts of capital. That capital is chasing few opportunities. And when I say few, it's because the liquidity has found the easy, low-hanging fruit. And so others require more analysis. So the ability for the private equity firms is that they're able to basically use a SPAC to acquire companies, and now they're part of that publicly listed company. It allows for an exit that might have taken in the past 5 to 10 years, maybe much sooner in terms of access to that liquidity. As you rightly mentioned, Kyle, for some of the smaller and mid-sized companies that are frequent readers and listeners to the videos on your online site, I think presents them in a significant opportunity that didn't exist before. In terms of the industries, I mean, we could just look at 2020, highly focused on technology, fintech to an extent, but online. I mean, some of the largest, we had DraftKings, which was is a sports betting company. We had, I think there was another one, Skills, which was another online gaming company. We had a couple of companies looking in the UK that also looked to list on the NASDAQ in the technology space. We had the very high profile Virgin Galactic, Richard Branson's company that'll take individuals to space, in which I'm quite proud of sitting at Weimer as Per Weimer's a founding astronaut with Richard of that company. So Virgin Galactic did a SPAC, although it wasn't a 2020 SPAC. It was actually the IPO was back in 2019, but became part of a SPAC that's met great reception. So now you're talking about space exploration and the future growth there. So technology there. We also have the ability from an individual point of view, real estate. Let's talk about real estate, one of my largest investments. There was a company came out that used a SPAC to merge with a company called, I think it was called Open Door, that allows you to buy and sell your home in a rather efficient and quick fashion. And that market is in the trillions. So I'd expect that company to do quite well. So every industry, any asset class can be part of that. And again, as the private equity companies are using the vehicle to provide liquidity to the market to help their returns as well. So it's not, I want to highlight, it's not for just the ultra uber wealthy. It's not for the massive asset managers. Individuals can take a place in it And as I mentioned at the start, the risk is relatively low because if you do a simple amount of analysis, you know how much capital is raised for an individual SPAC. You know what industry, as you kindly mentioned, Kyle, that they're either focused on. They're mostly not focused on just a broad array of industries. It's either going to be fintech space, life sciences space, real estate space. So you kind of know where they are. Now, which companies are they going to be targeting? Well, the whole point is a blank check. You don't know what the future companies are, but at least you know what the assets are when you eventually invest into it. It's liquid. You can get out. And then if you want to get out, you can get the warrant or option to participate at a future date in those future companies that they look to acquire.
Right. And what's interesting is you look at the investing landscape, or we'll call it the investing landscape here for a minute, is, as a founder, if you're going to raise capital, the opportunities now are more than ever. And I think we will start to see the return of some type of, whether it's IE or IT or IC type offering as well, reopening up those options, as we have so many both known and unknown investor opportunities. If you're, again, looking to raise capital, from syndicates to traditional, so angels and VCs and corporate VCs, so strategic investors, to private equity, to now, again, the SPACs. We have SPVs, as Jose had mentioned as well. We've got tons of opportunities if you're looking to fundraise. There's many. What matters is what's right for you and your company. And then on the investing side, to Peter's point, where do you want to focus, and also where is your risk appetite? But then it sits in the middle ground. Is one thing that SPACs also offer is that instant or close to more instant liquidity for the companies as they go public. So the employees who have spent all the time and effort and energy building up companies now can also profit in the company's growth sooner than if they go through a traditional public offering. There's an asterisk in that. That's not the same across the board. It's just a lot of what we've seen with some of the companies, some that have gone through this process as well. But with all that being said, I mean, the fundraising landscape is bigger and wider than ever. If you're looking to raise capital, there's more capital available than potentially ever before. And that's a lot of the stop that we had in 2020, but doesn't look like it's going to stop anytime soon. So companies that are looking to fundraise or to start, as Jose is going to interrupt me, I can already see there are plenty of opportunities for you, and you should definitely research all of them. And again, find the one that's right for you as well. But switching gears, as we look to 2021, I would love to hear both your opinions as to what's getting you excited from an industry or a technology sector here as we start to enter the year. I mean, again, we're 12 days into the year. It seems like we're already 4 months into the year with how much has already happened in these 12 days. Technology is moving arguably faster, and a lot of that was kept silent in 2020 and now is becoming more public here in 2021. But what is getting you excited as we move into this new year that will be open for advancement, that may be open for investing, or are open opportunities to start building? And Jose, let's start with you. I mean, business inclusion is what you are all about, and what BizMoney is as well. Providing more opportunities to those looking to build companies or to start offering products and services around the world. With that being said, what areas of interest, industry or technology, do you see as exciting or thriving in 2021?
Definitely, I would say that apart from BizMoney, because we have a completely different focus, but apart from BizMoney, definitely the next 3 to 5 years will be artificial intelligence, robotization for sure. Let's hope that the quantum computing gets out sooner or later. If that gets out, then it's like a real revolution. I think maybe the 5th revolution definitely is quantum computing. And the issue is that I'm not focused. We are not focused on a specific sector, because what we supply is basically a layer or a highway that people can use to get to their goals. And we start where the professional investors normally don't want to get in because it's super high risk, and we end where the professional investors pick up. So we basically are targeting that, what I call a black hole, right? That black hole that nobody wants to get in because you get sucked in and you don't get out. That's exactly where we feel that we are comfortable and we are, let's say, a pioneer and a leader, and we can make a real difference, right? And then once people get through that black hole, and they survived, and we improve their chances, etc., then suddenly, they can be taken over by the professional investment community in the investment risks that they normally like to take. And what I've been struggling all this time is telling everybody, look, everything is fine, everything is really good. But the problem is, I talk every day, and my team talks every day with people, simple people, right? Millennials, I generation, but also older people that simply are not able to get there, because what they say is different from what the professional investors say. Professional investors will say, there is a lot of cash, we want to invest. And they will say, well, we don't see the cash because you never invest. So there's a huge difference between the offer and demand. And that cash is really available. I know it's available. And a lot of it's also stuck in pension funds. But the problem is, they don't understand that they don't fit into the investment criteria, and they are not there to be picked up by a professional investor. And what we are trying to do is, fill in this gap, that they become, get to that point that they can be picked up.
Absolutely. And thank you, Jose. And Peter, same question to you. I mean, areas of industry and technology that you're most excited about heading into 2021.
I'll talk about a couple of things regarding that, Kyle. First of all, we painted a very positive picture on SPACs. I think in 2021, you're going to see, and going forward, a bifurcation among SPACs. And that's the top SPAC managers, private equity funds, asset managers, or et cetera, that have a long-standing track record in terms of acquiring and exiting of companies. Those will attract likely the largest share of capital. And then there's everybody else. So as an investor, a retail investor into a SPAC, very important, just like anything else, when we talk about ESG, the G, corporate governance, who is the manager of that SPAC? Who is likely to have success? Because in the post-trading world, a couple things. One, you want to ensure that they acquire good companies. Number two, you want to make sure that they could run those companies efficiently so that the SPAC increases in value from a long-term investment. So I think it's important. Easy access to capital for a company, small, mid-sized company that's looking to be publicly listed. But as a small or mid-sized company, you also want to hook up with the proper manager that could provide the advice you need, operational advice, et cetera, management, to take your company to the next level, not just to get liquidity to cash out and then it fails. So I just want to highlight that topic. Where am I excited looking into 2021? First of all, on the technology side, I think there's a tremendous opportunity in life sciences. And I'm not talking about life sciences just as a broad topic, but particularly involved in those that have the technology to have an impact on the lives of people. And this comes at a cost too. There's a positive and negative. Positive, monitoring the health and well-being of individuals, whether those individuals are in care homes, the elderly, or it's simply a person checking into a hotel, monitoring their body, their functions, temperature, health, and well-being, etc. So that's the positive, that we're going to see more and more opportunities in that space. And we're going to see a lot of SPACs focused on the life sciences, fintech as well. The contrarian part of that is 1984, George Orwell, Big Brother's watching. Somebody sent me a joke the other day talking about why are you talking so quietly? Wife asked her husband. He says, because I'm concerned about Mark Zuckerberg listening. He laughed, she laughed, Siri laughed, Alexa laughed, so Big Brother is watching. So obviously, according with the life sciences, obviously the other set part of that is technology in terms of more and more encroaching on your life's style. I think there still is huge opportunities there. The infrastructure that goes into the technology, particularly since more and more people are working from home. There's going to be a greater need for data, and that data is going to require more and more data centers, okay? And the energy supplying those data centers are going to be important. And so I think there's going to be great opportunities on the real estate side, investing in data centers as well. So from a real estate point of view, I think they'll continue to attract a large amount of capital, as well as more efficient energy that is provided to run those data centers, to keep them cool and keep the servers cool. So life sciences, real estate, particularly focused on the data center side, and that's on my side, on the technology side. Mom and pop, nuts and bolts. Our focus is real estate. I'm going to be looking at deploying significant amount of capital in the billions into real estate across various asset classes, and looking in four strategy: core and core plus, value add, opportunistic, distressed, and hospitality. And I mention that because hospitality is going to see a huge technology component going forward. You will no longer check in just by a pretty girl or guy at the front desk. It'll be through your mobile. You'll get deliveries, not through room service, but through your mobile app. Seamless, Deliveroo, others will come in that way. The whole experience is going to be changed. And you're also going to, your health and well-being is going to be monitored in the room. So you're going to have smarter rooms in the hospitality space, in the hotel space, and also in the care homes, et cetera. So I'm going to be looking at those for those technology companies that are going to be benefiting from that explosive growth.
And also maybe even a robot may deliver your former room service or your Deliveroo delivery as well, as we've started to see the early days of that as well. And
I'd rather
great
see
points.
Person, but
It's same. But I mean,
technology is cool.
Yeah, technology's here. It's going to be in our life one way or another, but we'll see how it plays out. And Peter, Jose, thank you very much for sharing all your thoughts and insights around SPACs, but also, the greater picture of where these are evolving into, but then also the broader landscape of venture and fundraising, along with new technologies here for 2021. But Jose, I want to come to you for closing thoughts. Where can you be found online as the audience looks to connect with you and talk a little bit more about BizMoney?
So my closing thoughts goes today to a very actual issue, which is everybody is talking about breaking up Facebook and eventually breaking up Amazon and all these big companies because of the amount of power that they are combining. And what I'm thinking is that if it comes to that point, right, and we have seen that in the past. I worked for a multi-billion-dollar company, really big, several years, and it was broken up, so I know what it is. So it was like almost 30 years ago. But anyway, you also can think about that these specs that where you're able to create conglomerates, you can also create super conglomerates, right? That could eventually even be bigger than Amazon and Facebook combined. So my question is, and that's the thought that I have from closing thought today is, if it will ever come to that point, and if our system and our governance will ever permit that it come to that point. You can find me on LinkedIn in essence, or just go to BizMoney or search me up on the Jose Braca, or you just can come here on VCTV, and there is a very nice button that you can push it, and you can contact me at there as well. Thank you, Kyle.
Thank you, Jose. Peter, same to you. Closing thoughts, and then also where everyone can find you, the Weimer family office, and then also connect with you offline about some of the opportunities you mentioned today.
So today's topic was clearly on SPACs and raising capital via it. And I just want to highlight that again, we discussed all the positive opportunities there and the tremendous growth that's going to happen. But like any investment, it's fraught with risks. You want to find the best managers that will have the most success, or try to have the most success in this. And so my view always in starting into a new asset class is to educate yourself, use the research. There's a tremendous amount of stuff online, and try to focus on learning from the existing managers that have been successful in SPACs over the last several years. This is not an asset class that just was invented in 2019. It goes back to the 80s. We talked about reverse mergers in European countries, et cetera. So get educated. It's not a new asset class. It is a growing asset class, and it does provide significant liquidity for those companies that would like to be able to be public entities or trade within the entity of a public entity. Listen, my family office is a multi-billion-dollar multifamily office. We focus on various asset classes and industries. I'm available. You can find me at wfo.am, which is our family office site. Also, weimerfinancial.com. I have my own website, peterplaut.com. Talks a little bit about what interests me and my family. Has some nice pictures there of the family and what we do in terms of at Weimer and other opportunities. Always available to take calls on LinkedIn, Facebook. Reach out to me. Happy to be a mentor, provide advice, guidance, any instruction I could do. It's my pleasure and honor. And as always, Kyle and Maria, always thanks for having me on this video each week. I really appreciate it and look forward to it going forward.
Thank you very much, Peter. And thank you, Jose, as well, again, for not just joining us today, but also continuing to share your thoughts and insights with our entire VCTV community around the world. It's an absolute pleasure to have the chance to sit on the stage and hear and converse with both of you. So thank you very much. We're very honored as well. And to your audience, thank you so much for tuning in. If you like what you heard, click subscribe, give us a thumbs up, check out the archive to hear more from Jose and Peter, along with all speakers from around the world, as we bring them here for you on VCTV to share their thoughts and insights, along with on-the-ground perspective around different technologies, industries, regions, and topics happening around the world as well. And if you'd like to be on a show like today, like Peter and Jose and others, do reach out to the team and or myself, or as an entrepreneur, to pitch us your company, product, or service, along with our entire live audience as well. And we'll find the right spot for you in either case. With that being said, a big thank you to the LATOKEN team and to Maria for making VCTV possible every single day. I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott, along with Peter and Jose on all respected social medias. Do reach out to continue the conversation. Remember to add context so we know what to talk about, where you heard us, and to make the best and most efficient conversation going forward. With that, we'll be back here tomorrow with more VCTV. Everyone have a great day. Talk soon.
Thanks, guys.
Everybody.